So, so far we've intentionally relied upon moving our profits forward and growing our portfolio. And we've done that through sometimes selling, generally trying to buy and hold and do cash out refis to get additional funds, all the income rolling it back into future properties, things like that. We also have had debt investors. So we have worked with other investors, but we've simplified it. Some investors love that because it's
Hmm.
basically effectively guaranteed. I mean, nothing is entirely guaranteed in the world, but it's the most guaranteed that you can get, and it's very repeatable. In other words, it's a steady income, the same every month, and very dependable. And so we've done that in the past. And there's a lot of interest from investors in an equity stake. So because of that, we do have investors who would like to invest with us. So we're now looking at the syndication, the traditional syndication model of an equity share.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello, and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke, and today we have Scott Price. Scott is a real estate investor and founder of Bonvolo Real Estate Investments in Washington. Scott, thank you so much for joining us on the show. How you doing, my friend?
Oh, I'm doing well. Thanks for having me, Dwaine.
And I really appreciate you taking the time. Understanding you're way out in Washington State. I'm here in Connecticut. So like I said, it's excellent to be speaking with investors all over the country. So now talking to you is another check off my list of, investors trying to hit all 50 states, pretty soon. So I really appreciate you taking, part of your day to speak with us and to learn a little bit more about your business. But before we kind of kick things off, we'd love to a little bit learn more about you. Would you mind talk a little bit about your background, how you got started in real estate?
Sure, happy to. Yeah, I bought my very first rental a long time ago, and it was a classic thing where I didn't really know what I was doing at the time. Just kind of had one. It was just a single family condo kind of situation, and I actually ended up selling it and getting diverted into other things. And then I kept coming back to real estate as being really the best long-term plan for me, and I think for most people, in terms of building wealth and passive income. So I said, okay, I'm not going to make that mistake again. And then I started getting serious about it. And I would say my serious phase was starting around 2004, 2005. And I did a development deal, and then started getting into multifamily, and jumped right in. The profits from my development deal, I rolled it straight into a 29 unit, and then from there just kept rolling my profits, my cash out refis, my income. I was actually working a W-2 job for a long time, until actually just a couple years ago. And so I had all my expenses paid by my regular job. And then my second job of real estate investing, I was working on the idea of, okay, I'm going to grow my portfolio in multifamily, office, and retail, which are the main things that I own. And then I also have some singles and some land and things like that, but primarily multifamily, office, and retail. And just get it to a point where I could live comfortably just off of what I have, but then also use that as a basis for growing the business even further, which is what we're working on right now. And then over the past couple years, as the market has gotten more expensive, I guess you could say, the higher price points for the same kind of income, I'm still buying and still actively looking, but at the same time, while the market has zigged, I've zagged, so to speak, and I've gotten a little bit into hard money lending. I've also actually invested in some other people's deals because as you mentioned, I primarily invest in Washington State, and I know a lot of markets around Washington State very well, and I've invested in some better cash flowing markets, in some cases out of state. So that was kind of a new thing for me, investing in other people's deals. And I've even gotten into some coaching and done consulting for people on an hourly basis, not like a guru program or anything like that, but just to kind of like call in and help on specific things on an hourly basis, kind of a different model than the way most people do coaching. And and here we are. We're like you mentioned, we're out here in Washington, live on an island that's northwest of
Yes.
Seattle. Just built a home here and enjoying it. And this is kind of our I always joke it's our international headquarters, even though of course we're a small organization. So.
Yeah, great. It's like I said, excellent backstory. A lot to work with there. As far as kind of like you getting into, you said started with the single family and getting into the multifamily. Was that kind of that? Did you take any, education, like traditional educational stuff, or was more like, school of hard knocks? You just kind of went in and kind of learned along the way. I know you've been doing it for a long time, so of course you've been building up a lot of experience. But how did that education level from you kind of starting out, on your W-2 all the way out to your investment business?
Yeah. It really started with me investigating how people in general, just successful business people, were making significant money in terms of net worth and ideally passive income, but some kind of income stream. And the thing I kept finding over and over again was that there were people who could do very well in real estate, and it was a very understandable business model. It's not easy, but at the same time, if you work hard at it, you get educated, and in my case at least, I'm somewhat conservative on these things. So you don't just take any deal, but you take deals
Exactly.
that make sense and make sense for the long term, not just the short term. That it's something that if you're a bit patient, you can do well with it over time. And that's like I mentioned, when I had the very first little condo and I sold it because I had a problem tenant, and I said, oh, this real estate thing, I'm not going to deal with this anymore. And but then I just kept doing more and more research while I was getting distracted by things like stock day trading and other kinds of things that I got into for a little while. And then I came back and I said, no, the real estate really, really makes sense. And so I started doing the education. To answer your question, I started doing the education in several ways. Reading books, of course. I started going to meetings and meetups to meet investors who were actually doing it, not just talking about it, but actually doing it. And I did do also some paid education as well, and some of that was very good, and of course there's a wide range there. Some of it was not, but at the same time I was always taking little bits and nuggets from it and seeing what I could apply. And then I just said, I'm going to really do it. It's like I said, when I really started investing, which I considered to be the 2005 timeframe, I jumped right in. My first, really it was my second investment, but what I consider to be my first real investment was 29 units, and then after that I just started rolling up and to other asset classes from there.
Awesome. So you said you're currently in the Washington market. So you have like a diversified portfolio of different, single family, you said office and different things like that. Can you kind of talk about the Washington market? That's something that new that I haven't talked to any investors out there yet. You're the first. So I'd love to hear more about that marketplace and some of the characteristics that attract you there.
Sure. Yeah. Like any state, there's, a wide range of submarkets, and I tend to invest in tertiary markets, or what most people would call tertiary markets. And I primarily do that for cash flow. I'm a cash on cash return investor. I'm looking for income and also looking for money to roll back into other properties. So
Mm,
I'm not I get appreciation, but appreciation comes along with it, just riding the inflation train. I'm not buying properties on speculation, and I'm not buying properties, for instance, in Seattle, which is a market that has appreciated well. As to whether or not that'll continue, we'll see. But at the same time, it has appreciated well, but it has no cash flow. It's just a
hmm
non-cash flow market. So I don't participate in Seattle. I go outside, and what I'm looking for are smaller metros, not real small, not towns where there are more cows than people, that kind of thing. But smaller towns, usually in the 50 to 250,000 person population range. Although I do own in smaller towns than even 50,000. And I'm looking for all the classic drivers of the local job scene, population growth, what's going on in the local economy, what's the pipeline, all those kinds of things. We actually have a very defined process, a written process that my wife and I, who co-leads this with me, we go through for any market that we're jumping into. And so to get back to your specific question as far as Washington, it has a wide range. I wouldn't say just invest in Washington, but there's a lot of demand out here. And some of it is for, like, when you get in outlying areas, not just Seattle, but in some outlying areas, there is a good tech influence. Of course, there is in Seattle, very much so, but also in some outlying areas, there's a good tech influence. There's also a lot of quality of life and basically people who are coming out here just for lifestyle. That's another thing that's going on. It's great outdoors, beautiful area, and a lot of people moving in just because they want to live here and they might even just find a job. And then there's also a big difference between the west side, which is usually defined as west of the Cascade Mountain Range, and it tends to be the rainier part of the state, and then the east side, and which tends to be very dry, agricultural, with a few little hubs in there. And there are some really good growing towns all around the state, and the thing is to find the best ones. And I have particular towns that I like to look at and just focus on those. The biggest thing nowadays in Washington, like frankly anywhere else in the country, is that a lot of investors are chasing yield. So although I've been in tertiary markets when it wasn't cool, so to speak, now a lot of investors who are realizing they can't get any cash flow in the big markets are now going out to the secondary and tertiary markets. So I'm getting more competition out where I've been all along. So.
Yeah, that's very interesting. Yeah, that's thinking, like, when I think of Washington, I just think of, like, just a great area as far as kind of like the quality of life and just like the scenery and things like that. And of course, you get a lot of more tech coming in, especially in the capital. But like I said, the secondary and tertiary markets, as like I said, is where the activity that makes sense as far as yield and things like that, which you're particularly focusing on. Are you looking also outside of the Washington market and investing in other states, or are you just currently focused on Washington at this moment?
I am, the answer to your question, yes, directly. I'm currently entirely in Washington. I did once own a 40 unit in Memphis, but I've sold that. So I'm back all in Washington at the moment. And that was my one foray outside of state. I have invested in other markets indirectly as a passive investor, which is kind of funny because my preference and my background is more as the active lead. However, because there are some better cash flowing markets than some of the Washington markets, I've through either connections or finding out about good sponsors that I believe in, I have actually invested some of my funds out of state, but as a passive investor. So that's been an interesting switch, and it's certainly nice. Again, I generally do and prefer to be the lead, but at the same time, hey, I'll tell you, receiving that check in the mail every month, it's kind of nice.
Yeah, especially when you don't have to do anything for it. So
exactly. So I've with those particular deals, I do look at the markets as well. I'm looking at the markets, looking at the property, similar to as if I was going to invest in it myself. I'm not just looking at the pro forma and saying, oh my gosh, that percentage return looks great, and throw down some money. So I am investigating it. Most of the ones that I've invested in are either south, southeast, as far as US, and I have a few that are in the Midwest, but you got to watch out on the Midwest places. But there are a few really good markets actually in the Midwest, but not all of them are. So
yeah. Absolutely. And as far as kind of your other investments, I understand you said you own land and office. You can kind of talk about those and what kind of prompted you to kind of diversify your investments, which is, different from some people where they just kind of hunkered in on, just multifamily or something.
Yeah. I generally prefer multifamily as well. However, there are a lot of advantages with office and retail, especially. I can talk about land separately, but office and retail, especially if you can get a solid location with a strong economic driver in the area where you're always trying to think, okay, if the current tenant leaves this particular building, who's the next tenant going to be?
Hmm.
And you don't necessarily think of it that specifically with multifamily. Multifamily, it tends to be this kind of vague, amorphous blob of renters, and then it's like, well, how's the vacancy in the general market doing? And is it getting worse? Is it getting better? And you can generally adjust a few knobs. Like you can, if you really run into a problem, you can usually lower the rent and get somebody in,
Hmm.
in a unit in a multifamily. I mean, I'm generalizing, but nonetheless, there are different drivers for multifamily. Whereas if you have office or retail, you have to find a specific business who wants that specific location and that specific visibility and that specific size, and maybe the current tenant improvements, or you've got to spend a lot of money changing the TIs so that
Hmm.
so you can make it interesting to another tenant. So it's a whole different ballgame. You've got to be very specific on not only who's there right now, but who would be there in the future. But at the same time, once you get all that and you get the local pulse of what's vacant, what's not, what's available, what kind of businesses are in the area, what kind of businesses are likely to come. Office can be great because you get long-term leases, and or at
Hmm.
least you can. And like most of the places I have are at least 5-year leases, and like one I just got a 10-year lease on one of my places, and so that's one thing. It's great. So you don't have the churn necessarily, as long as they don't go out
Exactly.
of business, of course. And then the other thing is, a lot of them, not all of them, but a lot of them can be what they call triple net. And for your listeners who aren't familiar with that, that's essentially where the tenant is responsible practically for everything. A lot of times the basic structure will be the responsibility of the landlord, but the maintenance, the landscaping, even property taxes and insurance, things like that are the responsibility of the tenant. So it can be fairly hands off, and also fairly low risk once you have it actually occupied. The risk on office and retail is that once you have it not occupied, meaning somebody has left, unless you've got a really active market, it can be a long time between tenants for all the reasons I mentioned earlier, because you got to
Hmm.
find that specific one that's going to be there.
Exactly.
So
Yeah,
it'd be
yeah,
interesting.
definitely very familiar with net lease. We have my brokerage division that kind of handles all that stuff and focus on all that stuff where the tenant is, taking care of all the bills. So that's a good thing. But of course, like I said, you always got to look at it like every other type of investment. Can you kind of talk about kind of your future? I know we had talked about a little bit on the pre-call regarding kind of your future plans regarding your kind of syndication model and kind of building that up for years. You've been kind of doing it by yourself, and kind of you had mentioned snowballing and just kind of building up. But as far as kind of scale your business, can you kind of talk about what your future plans are there?
Sure. Yeah. So, so far we've intentionally relied upon moving our profits forward and growing our portfolio. And we've done that through sometimes selling, generally trying to buy and hold and do cash out refis to get additional funds, all the income rolling it back into future properties, things like that. We also have had debt investors. So we have worked with other investors, but we've simplified it. Some investors love that because it's
Hmm.
basically effectively guaranteed. I mean, nothing is entirely guaranteed in the world, but it's the most guaranteed that you can get, and it's very repeatable. In other words, it's a steady income, the same every month, and very dependable. And so we've done that in the past. and there's a lot of interest from investors in an equity stake. So because of that, we do have investors who would like to invest with us. So we're now looking at the syndication, the traditional syndication model of an equity share. And yeah, really the model for us was, like I said, for a number of years, I worked a W-2 job in usually various high tech companies. And then I said, okay, well, after I go full time on real estate investing, and I did my W-2 longer than I needed to, but again, it was kind of my conservative nature. And then, been a couple of years now of full time just doing real estate investing. I said, okay, well, now we'll put in place the machine that we need for supporting investors in more traditional syndications. So yeah, so that's really our next step. Like I said, we already have the team in place that I need in terms of setting everything up, from accounting and legal and all that kind of stuff, and I've become very familiar with the process. And of course, over the past 15 years of being the active lead on all of my projects, all of which have done well. So that's a good track record to start from. So now we're just really, at this point, we're in the search mode for one that we really feel confident and comfortable enough in the current market, which is somewhat high priced, as I mentioned, that can give appealing returns, plus be conservative enough that I feel confident enough to bring in other investors' money, because obviously that's a big responsibility. If it doesn't quite meet all those bars, then usually we take it down ourselves individually and without other investors. So,
and you're kind of is it more kind of focused as far as like target markets in the areas that you've invested passively in the past, or just do you have a kind of general idea of like the parts of the parts of the state, the country, that you're looking to take down some investments?
Yeah, so as far as doing a syndication, my current plan, or at least what I've been doing recently, is looking harder, I would say, in the markets I'm most familiar with, which again are in Washington, and the main reason I have not done it out of state, and the reason I've invested in other people's deals out of state, is that they have the local teams. I've got the local teams that I need in place in a number of markets around Washington. So my preference would be to do a syndication where I'm already strong. I already have a lot of knowledge about it. I have a good teams in place, things like that. So yeah, the real answer will be if the cap rate compression, or it seems to now be kind of bottoming out, but if the low cap rates across the general market continue, then I may start really increasing my connections in a few targeted markets, and then go out of state. I'm very comfortable with going out of state. I'm a big guy on processes and good teams and things like that. So I don't have to live next door, but at the same time, I want to, if I'm going to, again, use other people's money, I want to make sure I've got a really strong team in place. And if it's not, especially if it's not next door. So.
Exactly. Awesome. Yeah, that sounds great. Yeah. From my next question would be like going from, tech executive to, running your investment business. And then I understand you kind of running multiple businesses and kind of coordinating a lot of stuff. What's kind of like a typical work day for you? And do you have any special morning routines?
Yeah, so as far as the work day, it varies. It's all over the place. And the nice thing is, in some ways, since we do have a machine in place, with good property managers and good contractors and things like that, my time is very flexible, which is exactly why we're in this. It's one of the main reasons. As far as the morning routine, I do have certain things that I do every day, and I would say my morning routine actually starts in the evening. And what I mean by that is I really am setting the tone before I go to sleep.
Right.
A number of years ago, maybe 16, 17 years ago, something like that, my wife and I sat down and created a vision board. And when we did that, we had a number of things, a number of goals, a number of which actually on that vision board we've done, which is neat. We actually got together last year. We'll probably get together again soon to kind of, update it. And then what I did was I said, okay, well, vision board is great, but you need to make it more tactical than just, this pretty picture on the wall. So every evening before I go to sleep, I use this form that I've created, and I print it out in stacks, and it has some fairly small font on it, but it's a 1-page sheet that lists my top goals and then some sub goals under that are kind of in the maybe more immediate 3 to 6 to some case 12-month range for those high level life goals. And then I literally have columns, and one of them is, what am I going to do today for this goal? And I don't work on every goal every day, but what am I going to do today for this goal? And then at the end of the day, I do 2 things. I review it, and I actually grade myself. I have 3 columns on the right: yes, partial, or no. Yes means I did it. Partial means I did kind of it, some of it. And then no means I didn't do it.
Wow.
And I need to get back on that. So I grade myself. And so I do it before I go to sleep, so that when I wake up in the morning, so that's a routine. Again, it's not in the morning, but it is a routine for me. I'm ready to go, and I'm thinking about what's important for the day. As far as more, I guess you could say, traditional routines that I do exercise probably 5 to 6 days a week, and it's always in the morning. I'm trying to get into meditation. I've had so many people recommend it to me, and it's one of those things that I do it, but I don't do it every day. So if something falls off the priority list, it's usually that. And from what people tell me, I should move it up the priority list. So but anyhow, I do that every few days, I would say, something like that. And I also do reading, but I usually am reading when I'm on the exercise bike portion of my morning routine, and then I try to read before I go to sleep, partly so I'm not looking at a computer screen, so I'm going to sleep before I'm going to sleep, and then also just to kind of wind down from the end of the day. So again, it's not all in the morning, but it is then. And I would say those are the main rituals. I have some other ones as well, but those are the primary ones.
I like that a lot, especially the vision board. That's very very important. Because I learned from my different gurus, or through books, of course, that have different things that other successful people use is, of course, a visualization of goals and kind of constantly looking at them. And I like kind of, you have your paper where you kind of just rate yourself and kind of put all that stuff in writing, and then you can constantly see yourself and just constantly kind of noting if you did it, you didn't do it, or you partially did it, kind of a little accountability piece there. So it's like excellent. That helps towards that ultimate goal. And like I said, it just, goes to your success. Like I said, everything's been going extremely well. And like I said, due to kind of your structures and the systems and the routines that you have. So I really appreciate you sharing that with us. What you say, with all the success you have and kind of all your future goals and stuff, what you can say that you're most grateful for?
Yeah, I would say outside of real estate, I'm most appreciative and grateful for the people in my life, family and friends. And I'm also most grateful for the fun things and interesting things that I'm able to do in life. I have a lot of interests, and I think the world can be a very exciting place, and it's neat to be able to participate in that. So outside of real estate, those are my I would say my top 2. And then within real estate, I would also say people, and that's the people on my extended team that help make my business successful. Again, people like property managers and contractors and brokers and wholesalers and all the people that are all part of it. It's never just me. It's me and a lot of other people working together, and they're everybody in their own way. So there's that. And then also the people and resources that have helped in my education, my actionable education over time, that has been huge. Being able to learn from both the mistakes and the successes of prior people and apply them without having to spend 100 years, learning it from scratch myself
Yes, exactly.
is a big thing.
Awesome. Yeah, I really appreciate you sharing that. So, how do we get in contact with? We have you. We'll put all this information on our show notes for the podcast. But is there any information that you can share with us today?
Sure. The easiest way would be my website, which is bonvolo.com, and that's BONVOLO.com. And on there is several ways: a contact form, my direct email, my direct mobile phone number. So whatever your choice, it's all on there. So you can check it out there.
Awesome, Scott. Thank you so much. I really appreciate it. Kind of learn more about the Washington market, learn about your business model and your future business. I really appreciate that, especially all the tips too on your morning routine. I think that's going to add a lot of value to the listeners as well. But again, holidays are coming up. Enjoy it with your family. And again, really blessed to have you and have an opportunity to speak with you, and look forward to connecting again soon at some point.
Great. Thank you, Dwayne, and happy holidays to you and all your listeners.
Thank you. Take care, my friend. Bye-bye.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.